Good morning, traders, and welcome to the opening bell. Today is Wednesday, August 5th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the day with you guys. It's a quiet day in FX land, but there's tons of volatility elsewhere. We're seeing equity markets explode. We broke all three of those resistance levels on all three of the major indices yesterday. Gold making a breakout today, attempting to break that multi-week, multi-month, you could say, consolidation level. Meanwhile, I got the US dollar still holding the opening range, and dollar yen still right below that major critical resistance zone. So we'll take a look at all the US dollar crosses, gold, oil, and Bitcoin pretty much unchanged as well. Questions, straight setups, feel free to throw them on the message board. All right, great to see everyone in the room. Hey, Acacia, good morning. Latanya, good morning to you. James, Yana, Ken, Philip, Seth, great to see everyone this morning. So here's the DXY. I'm going to go through these pretty quickly, guys, because there's not much really that has changed. We've been talking about the resistance zone at 100 spot 15.35. That's near-term resistance. That's the level that would need to hold if DXY is heading lower. We rallied yesterday. We turned right after, right ahead of that, set 25% parallel. We're now checking the objective monthly and weekly open, 99.69, with key support just a bit lower, 99.42 into 99.49. And again, that's a basic 38.2 of the yearly range, the January highs, the monthly and weekly range low. So we're still sitting tight, right slap in the middle of the weekly opening range, just above downtrend support, just above lateral support. So nothing really changes on the DXY. Euro is trying to make a push through the high. So I put a video on StoneX TV. We'll be out probably within the hour here. This is the setup I've been showing you guys for the last couple of days. So the objective low, high, low pitchfork we've been tracking off of the June and July lows. That upper parallel has just been spot on. Resistance, resistance, we're there right now. The weekly range high executed on Sundays, 115.59. That's basically where this slope sits. My issue, or I shouldn't say my issue, the one thing you want to be noteful of here in Euro is that if we do break higher, the levels of resistance are stacked up, okay? First, you're looking at the May, January lows. You're talking about 1476 into 1478. That's the first hurdle. The 1618 off the yearly low is 1609. Then you have the 52-week, the 200, day moving average, and the 618 of the drop from April. So that gives you like 1628, 1648. So it's kind of stacked up here on the long side. I want to bring your attention really quick just to the weekly charts, because that 52-week moving average converges on that 618, which also converges on downtrend resistance. This slope line, guys, we've been tracking on the weekly chart in the Euro. This is the 618, okay, of that range. So yet another Fibonacci consideration, three-way confluence, 618 retracement, 618 slope, and the 52-week moving average are all right around that 1648 level. So that's kind of the big whopper zone for the Euro. Near term, we're testing slope resistance right now. Nothing changes from yesterday, okay? Today, aujourd'hui, right now, if we're heading higher, okay, look for support along the weekly open, the monthly open, 1535s. At the end of the day, if Euro is heading higher, any losses still need to be governed by 1469, 1482. You need to pop above 1578 to really fuel the next major leg towards 116. So Euro dollar's testing slope resistance, the weekly range high. We're right there. The weekly range is set. It's Wednesday. Let's see if we can't get a breakout on Euro. Here's sterling, right at the same pivot zone. So remember, last week we were talking about, I guess for the last couple of months, we've been talking about the yearly open, the 618 of the decline off the highs from May. You got the February low day close, was a major pivot all throughout the year. We got a false break scenario last week, or last month rather. And then into the start, we tried to close the month right up there, and then we posted this reversal candle into the start of the week. So look, the monthly open comes in at 34.86. Okay, if we pop through that, you're looking for the potential resumption towards 35.92. But it's not a convincing trade still, because momentum hasn't even broken 60. We're kind of sitting right there. So still, unfortunately, sterling remains one of our lowest conviction trades. All things held constant, if we do see a snap, a pop here, okay, The 35.09 is just the May 2025 swing high. That would be a decent breakout trade and an objective break of the weekly opening range. That would give us a conviction long bias, but we're not quite there just yet. So we'll continue to track British pound here. Weekly range is set right below 35. Look for a breakout of days ahead. Same objective outlook as yesterday, guys. If the technical structure we're looking at here is correct, losses would need to be limited to 34, 33.98 to be exact. That's a 38.2 of the advance off the yearly low. That's the 200-day moving average. That's the 25% parallel. So it's right below the range lows for the week. That's your near-term bullish inval. Looking for a breakout in the British pound weekly opening range. Oh, by the way, forgot to cover. We did get the ADP employment report coming out a little bit softer than expected today. We were looking for a print of 70,000, came in at 44,000. So may portend for potentially a little bit of a weaker day tomorrow on Friday with the non-farm payroll release on tap. You saw the dollar give a little back, but it kind of still gyrating more or less where we were ahead of that release. Traders will be really fixated on that print tomorrow. For the euro side of things, we do get retail sales, so keep an eye on that tomorrow ahead of this opening bell, and that is expected to show a little bit of a downtick there for the month of June. All right. Next up on tap, Aussie. Acacia says, exited my position early on Aussie, early in profit. Entry was 70.30, lost 70.90. Originally 70.56 was the take profit. Yeah, I don't blame you. Listen, you guys know where I stand on Aussie. The pivot zone we've been talking about for weeks has been 70 to 70.22, was rock solid pivot resistance. The breakout here should have yielded a larger recovery. And the fact that the pullback found support more or less there does support the notion for at least near-term continued upside. The problem is momentum is just failing right at 60. Remember, that's not the threshold we want to see. In strong uptrends, you want to see breaches above 60. In strong downtrends, that's exactly where momentum would tend to fail, is at 60. So I don't blame you, Acacia. No one ever went broke booking profits. So that's that's the way I say it. But certainly on this trade, early in the month, early in the week, right here into the start of August trade, I'm a little bit more hesitant. Here's the pitchfork we've been tracking, and it's still in play. It's getting a little messy, but it's still in play. And what does it highlight? Once again, 70.22, 70 into the 70 handle. Okay, that's still the pivot zone. Last month's opening range high. The Fibonacci cluster that's here. I'm not going to go over again. I've covered it with you every day, but all of that converges on the median line. So look, if Aussie's heading higher, now I would want to see failure start to hold 70. Okay, and we need to see a pop. Next level up is 70.82 into 70.83. Nice fib extensions there. Both converge right on the upper parallel to the close of this week, open of next week. So that's Aussie for you. Look, the weekly range is preserved. Here's your Sunday open, right? There's the high, 70.50. So all things held constant. And whenever we get this really foggy, dodgy price action, guys, we want to take it back to basics. We want to take it back to just a simple price study. The weekly range is set. You're trading right below uptrend resistance. It's still constructive near term above 70. But we really need to see that push through the upper parallel, start to gather some steam. 70.82 and 71.20 are topside levels in the event of a break. Anything below 70, we're going to go neutral, right? For the bears to reassert control, we got to take that to the new high, by the way. For the bears to reassert control, you'd need to see a break and a close below 69.83. Forget last week's open. Let's just keep that there. Make sense? Acacia, I don't blame you. It was a gutsy call even on the breakout because you never saw any follow through. Even on intraday momentum here, it's not bearish, but this is divergence, right? Price action with a higher high, the oscillator not confirming a new high in price. So momentum is waning. You're kind of stalling near the weekly highs. Uptrend resistance is there. Could get some kickback. If we do, look for support around 70 max, 70.22 max 70. Next upside target 70.83. Anything sub 69.83 is quite problematic, and that would be an objective break of the weekly opening range low. So at the end of the day, objectively, that would be like a near-term short bias. So that's Aussie dollar. You're pretty limited. There's no Aussie data of date, so watch for the US dollar to be driving this in the days ahead. Here's dollar CAD. Failure at the 618. I added this yesterday. A basic retracement off the high gave you 40.76. It's exactly where this thing petered out. The weekly range is super tight. Remember, bearish invalidation is 41. There's a new slope. Okay. If we just take, I think I adjusted this in overnight trade. Remind me, guys, if you guys remember, if this is new or not. I think I was working with the original slope with you guys yesterday, which had that 618 right there. Still could work. If we modify that slope, might be a decent gradient that's a little bit more objective. This slope, guys, mimics this. Here's a quick tidbit too. A lot of times, if you take the highs in price to connect your trend lines instead of just the most recent highs, right? A lot of people would work the slope like that. I like to work the absolute highs, right? If there's intraday highs in between, puts that gradient in play. A modified slope here mimics that same gradient. So maybe a better slope to play with. Look, at the end of the day, this thing is still potentially at risk for a deeper washout, but the level of resistance and bearish invalidation remains 4109. The November high day close, really nice pivot in price. That would necessitate a breakout of that channel, and we'd be looking for 4150. All things held constant, you want to sit tight here. Okay, momentum is right below 50. That's not really giving you a directional trade in one way or the other. Remember, on the weekly charts for dollar CAD, this is still kind of a pullback within a larger uptrend. This is just the objective May high from last year. Nice pivot in price. This is the fourth consecutive week we're sitting there. And we made an outside weekly reversal yesterday, last week. So what does that mean? For me, I'm looking for a breakout of that weekly range for guidance. So I think it takes a little bit more before we get a definitive sort of conviction break here. Questions on dollar CAD? Same as yesterday. Dollar CAD and sterling are both still kind of in that camp where you want to be a little bit more cautious. Dollar yen, textbook, man, 57.90, 57.70. We've been talking about this region. This is going to be the objective 2025 high day close, the November high from last year. Clear cut pivot all throughout the course of this year. 200-day moving average. We broke below it last month. We closed below it last month. The last 3 days, it's been resistance. So daily momentum is still in oversold condition. So we don't want to get cute here. I told you guys yesterday that the trader sentiment is also equalizing here. So you got basically a 50-50 split with longs and shorts, starting to build up a little bit on the short side, actually. But at the end of the day, that intervention, that joint intervention is certainly a concern. And again, it's hard to imagine traders really starting to stock in and trying to take this higher from these levels on the back of that move and that coordinated sort of intervention between the US and Japan. So nothing changes here. The focus is whether we maintain stance below the 200-day moving average. You might need another downdraft below 156.66 to get this going. That's the yearly open. That's the 618 of the advance off the yearly lows. Haven't made a daily close anywhere near this. In fact, here's what it looks like on a daily chart. Is this a simple break of support, test of resistance, then move off? That slope off the 2025 lows is still intact as well, right? On a closed basis, we're right there. So we're still looking for the pivot move. If we're heading lower, 57.90 needs to hold. Anything beyond 58.57 would threaten a larger recovery back towards 160. All things held constant. Nothing changes on dollar yen. Okay. Swissy also contracting, but the levels on this one, probably one of the cleanest of the lot. Okay. We talked about the fact that on the weekly chart, this was a very clear-cut trade. We reversed with an outside weekly reversal right off of confluent resistance, the 100% extension off the low, 38.2 off last year's high, uptrend resistance. There's the response. We're sitting at the median line. Now you drill down deeper, and the weekly and monthly opening ranges thus far, obviously there's no monthly opening range yet, is still right below that level. So 81 to 81.24 remains critical resistance. Here's what it looks like on the 4-hour chart. Your weekly range is set right below that. Ultimately, you would need to close below 80.41 to suggest that a larger correction is underway. That would threaten 80, and certainly a test of the yearly open. 200-day moving average takes you down to 79.30s. Northbound of 81.24, okay, you threaten resumption. We're still holding that multi-week, multi-month uptrend. Nothing has changed. The weekly opening range is set right above uptrend support. Let's look for the breakout. Non-farm payrolls could be the catalyst we need. Questions on Swissy? Okay, so that's the FX front. If you're not super excited, I don't blame you. It's been kind of a quiet background, but what's going on in gold? We did an update on this yesterday, guys, and we're finally getting the break. So recall, gold has been in a 5, 6, 7, week consolidation pattern. Here's the weekly chart. I gave you guys an update over the weekend. We updated this again with a video on StoneX TV yesterday, highlighting this consolidation that we've been straddling, this key level at 40.74 into 40.98, the objective March low, the 618 extension off the high. We've been straddling that now for 7 weeks with a consolidation zone. Recall that last month's opening range, defined by the first 3 days of trade, never broke. We're trying to make that break here today. Now, the high day close from July gave us 41.65. That converged on consolidation resistance, and that was the level I had highlighted as the breakout zone. We haven't marked a candle close above it yet, but certainly the breakout here, if we were to close at these levels, would suggest potential for recovery back towards the yearly open. A 38.2 retracement off the high gives you 43.04 momentum on the 4-hour chart, attempting to break into the overbought condition. Now, we've done this before. We did this song and dance back here on July 21st, and that just fizzled out right at the high day close and pulled back. Want to see some follow through here. Today's close will be critical. Close northbound to 41.65 keeps us on track for a larger recovery. I put an X post out as soon as this broke earlier today, guys. And I just want to highlight that slope, okay, comes in right around 42.20s. That's the 75% parallel of the pitchfork we've been tracking right off the objective high, low, high for the year. Really nice inflection along the median line. There's the 75% parallel resistance. We're approaching it now. Could get a little bit of kickback, could get some inflection there. That's your first hurdle. Next upside level, 43.04 to 43.19. Again, that 38.2 retracement of the decline off the April high, and the objective yearly open. Not Mike Boutros' opinion, not FOREX.com's opinion, fact. The major resistance, I know it's far off from where we are right now, but I just want to highlight the major resistance still falls right near 45 into 45.33. It's actually 44.90 into 45.33. It's the 200-day objective moving average, and that's a key 618 retracement, as well as the 2025 high day close. Okay, so clear pivot in price, 200-day moving average, downtrend resistance. That's your Whopper zone. First level up, 43.20s. Look for reaction there at that slope. Second level up, 43.04 into 43.19. If this breakout is legit, A, I want to see it close today above 41.65. B, max losses need to be 40.98, basically 41. So even if we kick back and bounce off that region, the recovery back above 41.65 would keep you constructive. So the onus is on the bulls to keep and maintain stability above this 41.65 level. Aujourd'hui, today, watch the close. Looks like we finally get a breakout here, potentially in gold. Questions? All right. Oil. So we are seeing that slope freakishly still hold. Remember, I slapped this on yesterday. I told you I don't have any conviction on it yet. But the break that we saw there really fueled that decline. We turned right ahead of the lower parallel. And we basically now are trying to maintain a stable stance below the 200-day moving average. We closed below it yesterday. Look for initial resistance there. It's 76.40. That's where the 200-day moving average is right now. It's been a decent pivot for oil over the last few years. So remember, I'm not huge on oil, on moving averages, but on every asset, you take it on its own merit. How has it performed? How has price action reacted there historically in recent history? And you can see some pretty nice pivot action. So initial resistance, 76.40. Okay, we're bearish below 80.75, 75 into 79.60. This zone right here. Okay, if oil is heading lower, rallies would need to be limited to that zone. The next level down is the 2025 yearly open, the August 2024 low day close. I'm sorry, this is the August 24th. It's the 25 calendar. I should have changed that yesterday. The low day close, and both of those converge on the lower parallel basically into the close of this week. So we're getting some commentary that, the deal, the negotiations are continuing on. At the same time, President Trump is warning of severe military action if this negotiation fails. The markets are still starting to become a little more numb with this commentary coming out of the Middle East. So keep your eyes on the headlines, but all things held constant from a technical approach, below 80.75 near term, the bears still have it. Questions on oil. Also, just for argument's sake, there's also a resistance trigger here on momentum I've been tracking. Keep an eye on that. Below that slope, want to see maintained stance below 79.60. That's oil. Last but not least, here's what Bitcoin looks like. No change at all. I just wanted to highlight that this still continues to hold the upslope from July. The monthly open now converges on that slope. Okay, that comes in right around 62,860. Bullish invalidation, or at least to invalidate last month's uptrend, still requires a break below 61,244. None of the levels on the upside changes. All things held constant. You're testing the June uptrend, the July uptrend right now. All right. I'd be remiss if I didn't go over really quick, since we got a couple of minutes left here, of the equity markets. Guys, this has been phenomenal. What an awesome break. Let me take you back to the weekly charts first. So we talked about the consolidation that we've been in for the S&P 500 ever since the high was registered, but that June whole calendar month has been in consolidation. Last week, we tempted a break of that slope and we recovered well back within the confines of it. This is a breakout. The record high close privy to yesterday was 75.79. We pushed well through that. The first two targets were 76.77 and 77.50. We're trying to push through that now. Now, this is the weekly chart. So we would need a weekly close northbound of 77.50 to keep the immediate upside bias in play. Momentum still hasn't broken to overbought. That breach into overbought would open up 8,000 all day long. Okay, so we are in an upslope here and a breakout of this consolidation. Here's what the S&P 500 looks like on the daily chart. Just to highlight the same slope that we've been in. Here's the consolidation we were looking at on the weekly. Here's last week's false break. Here's the break of the highs. Yesterday, we closed right at 77.49. Guys, the actual close was 77.47. Unbelievable. Okay, so right below that. So what I'm trying to say is we didn't close northbound of 77.50 on a daily close basis yet. We're trading above it now, but watch today's close. If we maintain that stance above 77.50, near-term target 78.81. That's just a 1618 extension just off the near-term approach from the June low. So 1, 2, 3 gives you a 1618 near 78.81. The 618 extension of the yearly advance using the March high and the June high low gives you 80.30, and that's the next upside target. So watch today's close with regards to 77.50. You're seeing a similar scenario on the NASDAQ. Obviously, the NASDAQ was the one that was the most at risk last week. We saw that deep drop below the median line, below near-term support, really recover, and we closed last week back above. Here's the punch through the 618 retracement of that decline. Watch today's close. Again, I'll bring you to the daily chart here. Haven't updated this, but I just want to highlight last month's open is right here. Let me bring this 618 and let me bring that record high close. Boom. That's the record weekly high close. So monthly open from last month is right here. There's the record high close. Okay. If we are heading higher on this stretch, I want to see pullbacks limited to 29,392 for that stretch towards the 30.40.06 level. Make sense? It's NASDAQ. So the Dow, the strongest of the three, well into overbought territory, plowed through 53,880, which was our our last objective target. We also had 53,654. We made it through both of those. Again, we're looking for the daily close today to validate that breakout. I need to do some work here on the Dow, guys, but there's a lot of upside. There's a lot of upside from here. We need to work some levels, but just to show you that this is a breakout of uptrend resistance, oftentimes can be the sharpest part of the rally. We're in overbought condition on the momentum chart. This is a momentum run. Don't get cute here. Things look constructive. All right. Okay, well, if there are no other questions, you get 6 minutes back on the day. The FX markets have been quiet, but the weekly ranges are well preserved. The longer the weekly ranges hold, the better the break. Non-farm payrolls are on tap on Friday. We still do get weekly jobless claims tomorrow, guys, and retail sales out of the Eurozone. So keep that in mind. Keep some powder dry as we head into the major event risk of the week on Friday. And hopefully we get a volatility kick here. But that gold breakout is also something we're keeping an eye out. And I'll try to keep you updated on MB Forex throughout the course of the day. Best of luck trading, and I'll see you guys tomorrow morning. Chandra, thank you. Have a nice day as well, guys. God bless. Cheers.